Good morning, everyone. All right. So hope everyone's having a good morning and is excited for a big week because we have a lot of news this week. But I'm gonna be going over just tape reading, just trying to see if I can make of how Monday wants to open up, how the week wants to open up. And hold on, my YouTube is not receiving video. But let's start with the daily chart for today. I've got this gap in mind, and there's a lot of inverse fair value gaps. So this area is going to be a very strong area to trade through. I'd be splitting all these gaps into quadrant levels, so 50, 25, 75%. Oh, good morning, Neko. Morning. We have a really interesting morning so far. But I think today is going to be exciting because Thursday was an inside day, or sorry, Friday. It stayed inside of Thursday, and so there's a lot of liquidity at Thursday's high and low, and this is why we could expect some volatility. But also, NFP is Friday. What's up, man? Uploading a video right now on weekly profile. Would appreciate if you gave some criticism on it. I watched the one you uploaded yesterday, and I think you needed to do like a second one because you wanted to wait till the Sunday open. So I'll keep watching for sure. But I think your take, OD, was you wanted price to potentially retrace into this gap. Same. I think it's about the similar to mine. Right. On Friday I was considering an immediate rebalance. So if we don't trade into that gap and we start to immediately push out and not trade to Thursday's high, and we start to really turn this day into a down close candle, I would be very, very bearish and expect the sell side liquidity to be around this week. So like I was saying, I expect today to still be pretty good because it's NFP, and ICT's own words is when it's NFP weeks, Monday is an absolutely do trade day. While every other Monday, usually you want to do less, right? So looking at the economic calendar, though, you see we have no news. So I am going to still be careful and just more tape read with caution. Then we have jolt job openings. FOMC should provide some sort of manipulation or reversal. So that's going to be a big day. Like most of my trading is going to probably be done, like not done as in finished with, but done as in will be executed after FOMC. I know Thursday before NFP is a little weird, but because we have PMI and after it's FOMC, I think we can still see some volatility. And then after Friday, I think we might be able to see a good run after the NFP news release. But anyways, let's go down to the lower time frame. So we opened up today, Asia just kind of trending higher, and then London consolidating, making a retracement on Asia. So we've already retraced sort of for today. We already seen the OTE, so we don't really need to be retracing here. And we did see the morning start to trend higher, and we ran out the relative equal highs overnight. We bumped into consequent encroachment, which actually is supposed to be an hourly consequent encroachment. Pretty sure it's, let me make it bigger. Yeah, it's an hourly consequent encroachment. Well, I think it's also the 15-minute, but we bumped into that wick, 50% of that wick, right? After taking out the short-term highs here, which are relatively equal. And I think we could be forming a market maker sell model because we've inversed the 815 gap, created an order block, and we're continuing to expand lower beneath that midnight open. So my premium level of interest would be that order block. If we come back above midnight open, anywhere from the order block to midnight open, those are areas that I would be interested in looking for shorts to get down to the London lows. Hold on. Odie said, by the way, what significance does it serve that Friday was an inside day? I get Thursday's high and low has lots of liquidity, but what does that do to price action? Well, if you think of a consolidation, I mean, you on the hourly chart, you're gonna have like an inside candle during consolidation, likely, right? Because we are just moving sideways, so it kind of tells you that on the daily chart, really, like, we've been consolidating. If you look at it from an hourly perspective, you can see that we're moving sideways, and so people aren't really taking buys based off trends. And if you actually, you can see there's a bit of a higher trend, and so it'd be easier to actually stab through that than continuing to make new highs. But that's sort of just a consolidation that's going to build liquidity at the high and low, and people are going to take more trades within that range. What's up, Jaser? Nice to see you in here. So yeah, that's what I was pointing to when I said that Thursday was an inside day. What was? Never mind. All right, and now I'm just really waiting for the 9:30 open. But before, actually, we'll talk about it right now. So we run up to grab the relative equal highs, run into that constant encroachment. We leave a lot of bullish fair value gaps, and then notice now on the 1 minute, this white line here, this is immediate rebalance. So I was telling OD about that on Discord. You were asking me some questions about immediate rebalance, and I said that oftentimes immediate rebalances will happen when we're failing to actually trade to any gaps higher. And so if you're seeing that the 15-minute chart is forming an order block, we took buy side liquidity, and you see the 1 minute chart immediately trade up into the previous candle like this, that's a very strong signature, and price will not trade back to wherever the high ends up, the swing high ends up being. Price will not trade back to it, and it will just continue to go down very quickly, never retracing into a real premium. And that's conveniently, that spot was right at the 15-minute bearish order block. A pretty strong occurrence there of an immediate rebalance. We formed another SMT with the S&P. Let's see. With the Thursday high? No. A little bit. Okay, yeah. Yeah, one thing you'll notice actually is if you look at the S&P and the Nasdaq and the Dow, the Dow is a lot lower and the Nasdaq's a lot higher. And I was going to talk about that next before I talk about the dollar, because this is, even though I'm seeing potential lower prices, I don't like that idea, because maybe we could get a 930 Judah swing lower and then higher prices, which would be better, right? Because Nasdaq is leading, obviously. It's showing that it's less willing to go lower. If it was actually willing to really go lower, it would be ahead of the Dow, and so likeliness of seeing nice big moves lower is less likely. And then on the dollar, we are expanding, right? So if we're going higher on the dollar, it's a lot easier for prices, anything priced in dollar, to go lower. So there's reasons why I like a bearish bias today, and there's also reasons why. Hold on, I gotta go on do not disturb. Alright, so yeah, there's reasons why I would like to go higher. There's also a reason why I would like to go lower based on the other markets. But mainly what I'm really concerned about is the Dow being ahead of the Nasdaq more than the dollar, because the dollar also took buy side liquidity and it's been expanding all day. And so I think that the dollar could retrace or consolidate and it's out of steam. So I'm not really worried about what the dollar is doing right now. It's just it would have been better if the dollar would have been going lower to see a nice move higher, to sweep out Thursday's high, and then S&P has kind of like relatively equal highs. It definitely needs to sweep this out at some point. This is too equal. So what I mainly focus on is seeing like an hourly swing low get broken. There's a big trend, so I'd be just looking at